What is the great wealth transfer and what do you do about it? Before we dive in, the only thing I ask in return for all the work that goes into making a video like this is that you hit that like button and don't forget to subscribe, because every time you do that, YouTube pushes this video out to more people and that helps prepare more people for what's actually happening right now. And what is happening is one of the most significant economic shifts in modern history. The United States is currently carrying more than $38 trillion in debt, and by every historical precedent, the current system should already be under extreme stress. And yet the country keeps operating as if nothing is wrong. Financial markets keep generally hitting all-time highs while the real economy is deteriorating underneath. And the people who come out ahead are the ones who understand not just why that's happening, but what it means for the enormous transfer of wealth that's quietly taking place all around us right now. So let's get into it. Between now and 2045, baby boomers and the silent generation are going to hand over approximately $84 trillion in assets to their heirs, with about $72 trillion going directly to the next generation. And embedded inside that number is something that most people are completely sleeping on, because 15 trillion of that total is not cash or stocks or bonds. It's profitable operating businesses with real cash flow, real assets, real customers, businesses that have been running successfully for 10, 15, 20 years. HVAC companies, dental practices, daycare networks, flooring contractors, landscaping businesses, the kind of businesses that the people who built them are now aging out of and desperately want to exit. And here's the critical part that most people miss. The kids don't want the business. The wives don't want the business. The husbands don't want the business. They want the cash. They want the stocks. They want to go live their lives. And so what you have is a massive inventory of profitable cash flow businesses sitting on the market, essentially looking for someone to step in and take over. And most people have no idea this window even exists. Now, before we go further, in times like these, the best way to secure and maintain your retirement is to maintain a balanced portfolio that can ride through this economic chaos. And with that in mind, I've developed a list of the best 6 stocks to own in 2026 that you can download for free at free.stockscommunity.com. That link is in the description. And if you're actively managing your stock portfolio, head over to stockscommunity.com to learn how I buy and sell stocks at the right time. I'm currently offering a completely free 10-minute training on how I spot stocks before they go up. This is the same training that one of our members watched and went on to make thousands of dollars in a day. You can view it completely free at the link in the description below. And as always, nothing in this video is financial advice. Do your own research. But let's keep going, because the great wealth transfer is not just one thing happening. It's actually 3 massive forces colliding at the exact same time. And you need to understand all 3 to see the full picture. The first force is the intergenerational transfer we just described. Baby boomers exiting their businesses and passing down their wealth. The second force is the technology boom we're living through right now, because here's something that's historically true without exception. Every major technology revolution produces a massive wealth transfer. The Industrial Revolution made certain people extraordinarily rich. The Internet Revolution made certain people extraordinarily rich. The AI revolution is doing the exact same thing right now. And it's not just the AI companies themselves that win. It is the picks and shovels, meaning the businesses that serve the AI economy, the infrastructure, the logistics, the support systems, the companies positioned around the AI boom that quietly capture enormous value while everyone's staring at the flashy headline stocks. And the third force, the one that almost nobody wants to say out loud, is that we're in what some people are calling a silent recession, or if we want to be more precise about it, a volatility recession, because technically a recession requires 2 consecutive quarters of shrinking GDP, and we can debate whether those numbers are being reported accurately. But what we cannot debate is that the real economy for everyday people is deteriorating. Foreclosures are rising. Regional banks are quietly selling off their treasuries at an alarming pace. The middle class is being squeezed from both sides. And during every period of economic contraction in history, there's always been a wealth transfer. Wealth does not disappear. It moves from the people who are not paying attention to the people who are. And that's the opportunity sitting right in front of you right now. Now let's talk about what is happening in the markets, because you cannot understand the wealth transfer opportunity without understanding the environment we're operating in. And That environment right now is genuinely chaotic. The Supreme Court ruled against Trump's use of IEEPA to impose tariffs, and within 24 hours, the administration pivoted to a 15% global tariff using a different legal mechanism. The EU froze ratification of its trade deal with the US, the UK, and Australia said they're weighing their options. India postponed a trip to finalize its agreement with the White House, and Trump responded saying any country that wants to play games will face higher tariffs and worse. So we now have a global trade situation that's escalating in real time with no clear resolution in sight. Hedge funds sold stocks at the fastest pace since the Liberation Day crash. IBM fell over 13% after Anthropic announced its AI can streamline COBOL code, which it powers 90% of US transactions. And CrowdStrike fell 10% when Anthropic announced Claude security. 200 million in crypto longs were liquidated in Bitcoin in an hour, and Warren Buffett's sitting on $380 billion in cash at Berkshire Hathaway. It's the single clearest signal you can get that the smartest money in the world thinks asset prices are dangerously elevated right now. The equal weighted S&P 500 is actually holding up near all-time highs, while the market cap weighted version is lagging, which tells you exactly where the pain is concentrated. The Magnificent Seven, big tech, consumer discretionary, financials, these are the sectors getting sold, while energy is up 23% year to date. Gold and silver are up 19 to 20%. Materials up 16%. Consumer staples up over 14%. Real estate, utilities, industrials are all pushing higher. Meaning the market's already been rotating into safety and defensive positioning for months, and most people are only now starting to notice. And this is where the great wealth transfer and the current market environment connect in a way that most people miss entirely. Because what the market is telling you right now through sector rotation, through gold hitting new highs, through Warren Buffett stacking cash, through hedge funds selling at record pace, is that we are in a K-shaped economy that is only going to become more K-shaped over time, meaning the people at the top are capturing more and more of the economic gains while the middle class is being compressed. And that compression of the middle class has direct implications for what kind of businesses survive and which ones struggle. The most practically useful thing you can internalize right now is this: steer clear of businesses that sell aspirational products to the middle class, a clothing brand selling $300 jeans to everyday people, a lifestyle brand targeting the squeezed middle. Anything that depends on discretionary spending from people whose real purchasing power is quietly eroding, those are the businesses you do not want to be acquiring or building right now. What you want instead are businesses that serve people in their fear and confusion, businesses that provide essential services regardless of economic condition, businesses at the extreme ends of the income distribution, the K, rather than the shrinking middle. Inelastic demand businesses where people have to pay no matter what, and businesses that service the effects of the volatility itself. Whether that's financial education, mental wellness at accessible price points, or any kind of clarity providing service in a world that's becoming more confusing by the day. And here's the actionable play that connects everything together. You have $15 trillion worth of profitable operating businesses sitting in the hands of baby boomers who want out and do not know how to exit. You have a volatile market environment where cash flowing businesses with real assets are dramatically more attractive than speculative tech stocks trading at 22 times earnings. You have financing mechanisms available to you right now that most people do not know exist. SBA loans, where the bank takes on the risk, not you personally. Owner financing, where the seller essentially finances the purchase themselves because they want out so badly, they will take payments from the future cash flow of the business they're selling you. And private equity structures, where you bring in a partner who understands the industry operationally while you handle the acquisition and structuring, meaning you do not need to know anything about HVAC or dentistry or landscaping to acquire one of these businesses. You just need to find someone who does and structure a partnership around their expertise. The part that scares most people when they hear this is they say, I do not know anything about that kind of business. It's reasonable to say that. And the answer to that fear is that you do not need to. That's literally what private equity fund managers do. They do not understand the underlying assets they invest in. They understand how to structure acquisitions, how to raise capital, how to negotiate, how to align incentives, and crucially, they know how to accrue. They partner with operators who understand the actual business. And you could do the exact same thing at a much smaller scale with a single profitable business that's clearing $1 million a year in cash flow and has real assets underneath it, and get a bank to finance it on an asset-backed structure with non-recourse debt, meaning if the business fails, the bank cannot come after you personally. Now, those are the kind of businesses you want to find in the stock market. And I want to point you towards one specific publicly traded opportunity that I think it sits right at the intersection of everything we've talked about today. And that's Freeport-McMoRan, ticker symbol FCX, which is one of the world's largest copper producers. And here's why this matters so much right now. Everything driving the great wealth transfer and the AI revolution runs on copper. Every data center being built to power the AI boom requires enormous amounts of copper wiring. Every electric vehicle requires 2 to 4 times as much copper as a traditional car. Every solar panel, every wind turbine, every piece of grid infrastructure being built to support the energy transition is copper intensive. And the supply side of the copper equation hasn't kept up because building a new copper mine takes anywhere from 10 to 20 years from discovery to production, meaning the supply constraints are structural and are not going away anytime soon. FCX, ticker FCX, is the picks and shovels play on everything the world's building right now. While everyone's arguing about which AI software company survives and which one gets disrupted by ChatGPT or Claude, the physical infrastructure underneath all of it, the wiring, the cooling systems, the power transmission, all of it needs copper, and Freeport is one of the most direct ways to own that demand. The stock's been beaten down alongside the broader materials sell-off and tariff uncertainty, which is exactly the kind of environment we've been talking about this entire video, where the wealth transfer happens from the people who sell in fear to the people who buy with clarity. The materials are actually up 16% year to date, is one of the best performing sectors in this entire market, and FCX sits right inside that tailwind, while also being directly leveraged to the AI build-out, the energy transition, and global infrastructure spending all at once. So this is not a trade. This is a long-term structural position in a commodity that the world cannot build the future without. Available right now at a price that reflects fear and uncertainty, rather than the decade-long demand story that's clearly in front of us. So, FCX. What did I miss here, and what would you push back on? So let me know in the comments below. And if you are managing your portfolio independently and want to know how I spot stocks before they go up, watch my completely free training at stockscommunity.com, where I go over the same methods I teach my students on how to find the best stocks, spending just, unbelievably, 10 minutes in front of their computers a day. And if you already have a portfolio going and want to make sure you're in the best stocks in the market, as soon as I get this newsletter fixed, download my best 6 stocks to own in 2026 for free at free.stockscommunity.com. If you found this information valuable, smash that like button. It's at 10:15 on Tuesday. Subscribe to the channel. Share this with someone who needs to hear it. Because the people who prepare themselves and stay one step ahead of the everyday person will always come out ahead in the long run. So thanks for watching. I'll get more videos out to you through the week and throughout the day, and I'll see you in the next one.